Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for visiting. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap OrderFlow tools with auction market theory using the volume profile as a chassis to overlay structured trades. And these are available to everyone in the Bookmap Discord TraderLab community. TraderLab is really about the business of trading, separating the fantasy from what the actual reality of the business is, and helping traders build out trade plans that they can customize to their own psychological, call it alignment. In other words, some traders trade large rotations, others are much more in a compressed rotation. And what is the answer for you? Well, that's an important question because you can't replicate what others do. And I think in education, the idea is to find out what others do, filter it, and then determine where your alignment is and what gives you a statistical probability of a positive outcome over a random distribution of interaction with the other participants. This is very much a gaming business, so it's not right wrong as you experience it, and we all have that emotional attachment, but it's really more sampling. So changing how you experience this environment, it's really most important to help you be able to operate in it, because it doesn't operate by, let's just say, the same rules that are typical experience in our regular lives outside of trading. So we have to kind of learn, you might say, the rules of the road in the trading business and differentiate from what else we do in our other parts of our lives. I hope that makes sense. This is a specialty business, and if you try to make it into something you're comfortable with and you can't be comfortable in randomness, I'm going to suggest the search for certainty and squeezing out risk might be a futile goal. And of course, it's up to you to determine whether or not that's the case. So let's go from here. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room, but if we get into real time, we'll always talk about it. Today was pretty interesting. I'm going to go over very quickly what we anticipated yesterday, how that played into today, and then what's going on right now. Is everybody tracking? Are you all with me? Please give a like. If you're in YouTube, a thumb up. And if you have questions, post them. I'll do my best, but if I can't get to them, there is a link in the bottom of YouTube. You can visit the TraderLab community. There's no cost for it. It's open to everyone. And we will go from there. This is Investor RT. It's my higher time frame. Now, this is Friday. Now, here's the thing about this. Market mechanics. Market goes up to go down, goes down to go up to go down, goes down to go up to go down, goes down, and this is Friday squeeze. And all this is a short covering at the moment on Friday, and then we opened higher. And what do? We take stops out here, stops out here, and what are we actually doing? We're taking shorts out. Now, if we take shorts out, this is called a short squeeze, then the anticipation, and if you guys remember, and you should watch yesterday's stream, the morning was longs to participate in the squeeze, and then we turn around. At least some of us, at least my plan, and I'm not saying it's a good one, it's just what it is. It was shorts. And the goal was to come here. Didn't get there yesterday. So if the shorts get squeezed out, then the potential, and that's what you get, the potential is to get the continuation. In other words, the trend. And the higher time frame trend is down. So if we think the trend is down, then subject to time frame, and this is really when we talk about time frame, everybody operates in different rotations. So think of it as rotational trading. If you're a day trader, it's a rotational process, right? So Now, and this is not, I'm just giving you an idea. For developing traders, I like to just focus on what we call the broad strokes. So, and one of the reasons I do that is I've kind of traded all different ways over the years, and I've been doing this 47 years. So I have been a high volume trader, and I've been a short term trader, and I've been a position trader, and a scalper. So I've done a lot of different things over the years because I was curious about them, and I wanted to try to find a niche for myself, kind of the thing that allowed me to really extract the best edge that was in alignment with my, call it, my mental state. So we have to find that also in trading. So for me, what it was is eventually it evolved to trading large swings. Now, large swings and intraday swings still, but I worked towards larger rotations. And what it did for me, and it's just a quick side note, and we'll move right on. What it did for me was it helped me psychologically change my emotional attachment to outcomes. And even though I use risk management in the sense of that, getting risk neutral, buying the stop on runners and the rest of it, I still have to probe the market for location. So it's a sampling. So if we look at the business potentially as a sampling environment or a random environment with a random distribution of outcomes, then it's not right wrong, at least for me, because we do interpret the outcomes as a right or wrong, but it's not right wrong. Your edge and extracting it is where you should show up and interact. Then that outcome is random, and they're all the same. What makes one trade successful, another trade not? How about randomness? Not right, wrong. And it's very important to change that. So I went to a larger rotation, just to give you the explanation, so I could change my attachment and that emotional aspect. Gee, I lost, or I was wrong. It's no longer that for me. I'm not attached. What I am is I see myself as a sampler of edge. Now, to get edge, if you have edge, then you have to sample the market in order to extract it. Casinos operate that way. They play games with edge, and they're still going to pay the gamblers because they basically, every time they deal the cards, they are sampling their edge. And their control stops when after they deal the cards. Then the cards coming out are random and the gamblers play is random. They don't have that control over the outcome. They only have control how they play the game. So in order to extract the edge, don't they have to play the game exactly the same way every time, or else they distort or disrupt their edge, or maybe shift the edge to the gamblers and away from themselves? What are we doing? So how do you stay disciplined? Well, for me, and I'm only talking again about me, but it's something you might think about, is I found that I had to find a way to get really neutral about the outcome. When I got more neutral about it, it relieved me from that stress, because if my plan has an edge and the rotations are there, then I can basically pay the overhead and cost of production and still have net. That's the idea. Now, whether that happens or not, that's part of the randomness or the thrill of trading. Is everybody tracking so far? And apologies for the overview, but I think it's kind of important to understand that what I do or any educator does is not relevant to what you do. But you can learn to understand market mechanics. What does the market do? How does it do it? Why does it do it? Right? So there we go. So this is the RTH Open. Now remember, my plan for today, not saying it's a good one. In fact, I got to just show you one other thing here. This was a target yesterday, don't forget. So this was important, and this was my target for today. So I was looking for squeeze out these shorts, thanks for playing, and then continuation selling, and the trend, continuation down. The other part is, on this day, this is called the value area. This is where 70% of the volume took place. You'll notice yesterday's low, and there's no precision, is in this area. So if this here area is too low, so basically up here, down here, and then looking to come inside. Didn't do it. So then for today, it was this, and down to here. So this is where the 60-ish is coming from. There's no precision. Remember, this is part of the thrill. Now, we've had a lot of news. You guys know about it. This is the news yesterday was that there were talks going on with Iran, and then it was denied, and so it was very volatile. Today, we start out with continuation selling, and then the news comes out again that, well, now maybe there really are talks with Iran, and that changes things. So let's go. So before that news hits, so for me, my trade today is, now let me tell you, we opened in a gap, RTH open. This is the overnight volume point of control. This is the fair price from the ETH. This is the naked volume point of control. This is the fair price from yesterday, which was the target, if you remember. So we open here. We have a high probability, over 98% probability, take out ETH high or low. We have this, which has about a 67% probability-ish. Past performance not indicative of future results. And we have ETH high low. We have yesterday's low for the gap, wherever it went. For the gap fill, I think it's here. But these will come back in. These come and go. Depends on what I'm doing over here. Okay. By the way, how we doing? Everybody doing okay in YouTube? Please give a like. Thanks for visiting TraderLab. So let's get going. So this is the RTH open. 1 second. Just trying to get things working here. Here you go. It's almost like the old black and white TVs. Give it a slap on the side, you know? Okay. So RTH open. This is a target, about an 80% probability, and I think it's about a 67% probability of filling the gap. This is an important level. ETH high, ETH low. I'll see you later. So for me, shorts. Now, this is how I started out this morning. So what I try to do is, again, if I'm trading larger rotations, which is what the objective is, I'm patient, I just wait. And I want to get, so I know that we have the gap, that we have a high probability of filling the gap. I cannot forget that. And I also know it's possible that because yesterday was a squeeze, that now I have longs in the market and I have stops under the market. So that sets me up for the shorts. Anyway, RTH open. Let's go take a look. This is called developing volume point of control. And let me move this thing along. So right here, we open. I see my sellers. I have my ETH low over here. This is the developing volume point of control. What this is the retail price. So I see this, I see my seller, I pull back. This is my first short. Now these are not necessarily structured trades. They can be. And I post this on TraderLab, and I always have to tell you guys, I never make trade recommendations because you don't want to take my stop. I take them, you take them, I take them. It's not a big deal. It's annoying, naturally, but it's not a big deal. So if I'm opening lower outside of range, there's about an 80% probability to get to the overnight volume point of control, which is above us somewhere because it's gone now. 72% probability at the ETH low, and about a 68% probability to fill the gap. Taking out the first hour's high or low, about a 98% probability. So, Now, here's a couple other little things you might find, just curiosity. Taking out the ETH high and low is the 13% probability. Getting to the previous value area, where'd it go? Low, 45% probability. So the probabilities are still were favoring the downside when I started. And getting up to the point of control, which disappeared again, should be out here someplace. here is about, lost it, 30%. So everything is kind of leaning down for me. So statistically and conditionally or contextually. Does that make sense? Okay, I guess it does. So anyway, I was looking at the short, and I do have to be aware of the possibilities of getting, like always. So I'm going for this anyway. So first short is here, very aggressive, and it's called mean reversion. Now I see here, you can see the sellers are here, and I break. Now I see my sellers, and I know under here I have the buyers, so I have sell stops here. So I got buy stops here, sell stops here. Let's label this, because this is the opening swing high. I'm going to put a little label up here for you. And I'm just showing you process. I'm not saying it's good, bad, or indifferent. I really don't have much of an opinion on it. I just do the same thing. What I found for me is I have to use anchored inputs. And I talk about this in my primer webinar, and that's available to all of you, as well as a library of webinars, documents, and a lot of other stuff, statistical probabilities, data mining, etc. This is, so once I break here, and I know I have stops here, and I get this bounce, now I'm knowing, okay, I've got sellers here. If I don't come, and this is where my buyers were and the sellers took control. So I got sellers up here, buyers here, break low, that's a trigger. Now I can't do anything with this. When I come back up, this is where I get short, and I'm trying to come under here. So this is where, so I get short, I get risk neutral. I'm going for this, and I got my resting liquidity. Just telling you, it's a trade. It's not magic. It's just a trade. Notice where we come over here. Isn't this interesting? Now I put the trade on. I just let it do what it's going to do. All right. So I get taken out here. All right. So it's a scratch. No big deal. Other than, you mutter, you talk, you say a few things to it. Right. You ever do that? So overnight volume point of control, and this, so this is about an 80% probability, resting liquidity. So now I'm coming up here and I'm saying, all right, this is fine, nice strike price, very nice. If I can get short, I'm trying to come here and out the bottom, next location. So I just sort of, do my thing. I took a short here. I was going to go, my target was to come back here, and again, out the bottom. Not so much. Took a stop here. Okay. Why? Well, I can tell you why. Because it needed to clear this. Now, what I know is right here, this is my trigger. I have to clear this. Now, I thought about this one, and I said, this is pretty aggressive. I got VPOC migration, but what else? This is an important level, and it's resistance for me, based on the auction. So valid trade, locations like real estate. This was the obstacle to clear. Didn't do it. All right. So that was that. So come up to the next level of liquidity. Let's look at this one. Took it again. Now, look. So this is an order flow trigger. Break low. There's the trigger. The resistance is here. So I took a short here, stop up here, scale here this time, and then holding. And then, where am I going? Same trade. So basically, what I ended up doing over here, this is the same trade, but this is my obstacle, you see. So this might have been a little aggressive, but I just followed the plan. So if I get squeezed, I go to the next level, and then I look. So I'm outside. So, but let's look what else, where I am and where I'm not. Let's just come back to something here somewhere. See, I'm still outside of yesterday's range. Now, I have a 67% ish probability, I think it was, to fill the gap. I am not forgetting that, but I'm just following the plan. So I'm aware of what might happen. I can't tell you what will happen. Haven't figured that out, so I don't try. Anyway, this is a short for me. So there to there, and then the goal is to come here for another scale, and then out the bottom. Or I should not out the bottom, to overnight low. And you see the liquidity, so I got an order sitting there. That's all I know. That's what I'm doing, sticking with it. Okay, so all right, so there to there to there. Notice the break below and the pullback. Advanced traders could sell this. Not going to say much more about it. It's also a more advanced TraderLab. Here, let me just put this in here for you. Should be marking these. I'm getting lazy. I call these variable high volume nodes, and all they are, it's very simple. This yellow line is volume. If I leave, think of it like shopping. It's very simple. If this is too low, this is the retail price. If I come above it, I can return to it, which is why I was taking this short over here to come back here, because my plan was what? Short. So I'm using counter rotations for what I perceive to be alignment with the trend, and the trend is down at this point, so I'm only taking shorts. Other traders take longs. It doesn't matter. It's not a right wrong thing. It's a plan deal. So this is a short here also, and again, this is kind of up to the individual. In fact, let me show you a couple. These get more advanced, and I really don't want anybody doing any of this unless you vet it. And nothing is mechanical, unfortunately. So let's look. This is a short. This right here is support. If I break below it, right here is resistance. Okay? Now, my primary exit was here, okay, right here, because I go for statistics. My extended target was 60, so I was looking for 60. Now, of course, news came out, and that changes everything. So you understand how the auction works, and this is resistance too. You see it? So now, for me, when I see this, I'm going, well, is this too high? Then I can come down again. So let's see what happens. So this right here becomes resistance. I put a little box around them. There's also resistance up here too. I gotta be thinking about this one. Sorry about that, guys. Now, what you're going to find strange about this, probably, I can sell this, and I'm trying to go here, okay? But it's much more advanced. In other words, I'm reading the order flow, and I already know what's here. I got sellers here, you see. Why did it go down? Because the buyers were absorbed. So I got my sellers here. I get my buyers. Why didn't it go up? Sellers are still here, and the sellers are here. Now, you don't know, right? So if I find my seller, I can sell this, and would be trying to go here. So if I come over here, it's the same trade, basically. That's why I always say, if I put a trade on and get picked off, which is fine, other than emotional noise, is the trade really failed? So if I have a location, I already know, based on what happened over here, if the sellers are here, 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 if I come back up and I see absorption again, and there's a seller, there's an iceberg, I can sell this again. And then I got to go here. And the goal would be to get under here and, out the bottom. Notice the behavior right there. So what I know is once I'm above this can act as support. So if I'm only talking very short-term rotational trading here, not recommendations naturally. If I get short, this is support. Now, there's a couple things you can do with this. If you think the trend, if you're going to trade the rotations and you are, now the term counter trend is a time frame kind of a thing. Other traders in TraderLab are going to take long. I trade primarily one side. And if it gets disqualified, I just will wait. Or my trades are done and I'll turn around or I won't do anything. I'll just get in a Barca lounger. I'm no longer compulsive. Used to be. We all are because you don't want to miss it and it's FOMO, it's all this other stuff, right? Well, after a while you kind of get detached because you have all day and the trades come. But when you're in the moment, you take a stop, you want to make it back. Revenge trading. And then it moves and you're not in it, it's FOMO. Is that you? It's all of us. But you have to get trading maturity and understand when you feel the impulse that you have to filter it. You have to go, oh, I'm feeling blank, I can't, and that's it, you see. Recognize it, interrupt it. Now, for me, primarily, I still want to be on the short side, but once we come out, and I haven't seen anything really, I have actually see what we're doing now as we're rotating down. You don't have to be trading anything. Guys, you could just be hanging out and wait for your trade. If it doesn't fit your plan, you don't have a trade. It's not complicated. It is random. So here we have liquidity. What is this again? This is support. This is your VWAP in your mid. Who knew? Break here. This becomes resistance here. See the sweep. Okay. And you're looking just, to fall out the bottom. So, and we have reports and other things coming along. VPOC migration. Too high. I'm going to label this. So as of this time right here, I'm feeling, I'm using the term feeling, that based on my plan, everything is pretty much doing what the plan suggests it might do. And it's behaving structurally. So far, I'm all good with the shorts, okay? Now, right here, notice where my resistance is. See, this. So when I come up here, I've got resting liquidity. This comes in the book. And again, what I'm looking for is mean reversion. So the idea of this trade is to come outside. Once we cross, notice the change here. So this says too high. I'm not paying that. New retail price. If I break low and test, it suggests too high, and I'm looking to fall out the bottom. Okay? So this and this are resistance for me. This is the obstacle, and then looking to fall out the bottom. Stopped out right here. Okay? Now this is resistance. I get a sweep here. I get VPOC migration. I test. I'm looking for a short here to come back to there. Okay? Put it on. This comes in. Take a stop. Okay. Now it's like, what's going on? So now I'm going, this is interesting. So now I'm looking at this and I'm going, wow, this is problematic. And this is the first hour's high that comes in at 9:30. It's not in yet. And then I have yesterday's low. So I'm starting to look at this and I'm going, well, I have some choices. I can either stand aside or I can still work short mean reversion trades. But I know now, and I'm okay with this. This isn't a recommendation. I'm not disturbed. I'll trade rotations. But now I know I'm tightening things up because I'm I'm beginning to perceive for me that in the developing daily time frame, I'm counter trend. Okay. And in the higher time frame, trend is down. So it's kind of, how do you reconcile that? Well, as a day trader, you can trade either side, both sides, or one side. I tend to stay with one side. So for me, this is a short. And I'm also very aware that I can get run over, which of course you can at any time. So let's look at this. So this right here, let's remember this. Let me show this to you. This is a couple of the elements I put together. And I'm still all about getting short. So up here, there's a sweep. I like sweeps. I break low. This is support. Okay? I come back up, sweep. Now, this, I took a short here. My stop is up here. And I'm thrilled to have it at yesterday's low with a high probability of filling. But I have a trade and I'm trading reversion. So I don't get too hung up about this. I just take my stop with everybody else. I'm not too concerned about it. I got over being concerned. Let me tell you why I'm not concerned. Whether I'm concerned or not doesn't change the outcome. So my concern is emotional, right? Fear of loss. I had to start learning about my concern, my fear, my apprehension, my anxiety. Where does all this come from? Cortisol, fight and flight, right? All of this is wired into us. You know, saber-tooth tiger, go the other way. We don't want to find out, right? Well, what about this? Our primal wiring doesn't differentiate the uncertainty. Does it know the difference between a stop or a saber-tooth tiger? It does not. So the emotional trigger you get of fear and looking for certainty, which is what most retail traders are responding to, which puts them out of the business, in my opinion, is the problem, right? So anyway, short, this is an obstacle. My stop is there. I'm looking for this and to come down here. Okay? That's my trade. Sticking with it, who knows? So right here, and this is my next target, this thing right here. So this gets scaled here, going for there, going for there. So this one was very exciting. So get risk neutral. And now I know the mid and the VWAP are here. Now the thing about this is, often, usually, we get mechanical retail buyers here at the mid and the VWAP, and they're going to put their stops here. Okay, so when I see the counter rotation, I don't have a problem with it, because then I'm thinking, well, I got my sellers under these guys, and if I get this rotation, then I can come down, take them out, and come down here. Next area, by the way. Let me highlight this thing, put a line on it. So the trade for me was, bang, or this could be a short here, to there, to there, to there, out the bottom. Okay, so that's my orientation so far. Notice where we come. Okay, now we come back here. So I'm thinking, and when I say thinking, it's plan based. It's, maybe I should use the word I'm hoping. That doesn't do me any good either. So I'm just following it. It's like I follow the yellow brick road. So this is another short opportunity or trade management. And then this. Okay. So I'm just telling you that's the trade. And this doesn't happen and I get taken out. Now, fortunately, getting taken out doesn't mean getting obliterated. It just means the volatility, So once this starts going on like this, and this, so I was trying to get under here to go here. You can see it just didn't do it. So for me, the trades are all fine. This is all good. So everything is okay for me in my plan for the day. And I also am not forgetting this. All right. So I know I have stops above the IB, and at 9:30 Central Time, my time here in Chicago, there's over 90, what is it here? 98% probability to take out first hour's high or low. Well, it's certainly starting to look to me like it's going to be these guys. Okay, so now it becomes, if I come back in the range, then really I'm starting to kind of go, this is problematic. So I have to start looking at things like settlement. I got to look at value area and ETH high. Now remember the statistics. Taking out the ETH high and low is 11%. No, I'm sorry. Overnight, yeah, ETH high and low is 13%. Past performance not indicative of future results. So I kind of was thinking about this, and I'm going, oh, what? And now there's going to be news too, don't forget. So the news just throws, I think we call the wrench into the works. Because once news happens, it disrupts the auction. So this is the auction. So what's too high, what's too low, and what's fair. So when I can't get back below here, and I have a high probability of the gap, now it's what's going on? Okay, I'm getting the brain is starting to spin a little bit, and I'm going, Anyway, right here, I filled the gap. I took a short here. All right, trying to come here, mean reversion. Got scaled, and then there's the news. So I got taken out. Now, I post some of these in TraderLab, some I don't, because they're not structured in that way. So I have the news. It's like, what happened? And I certainly looks like news. Look at that. The book cleared, everything cleared out. I got the sweep here. I got short here. And then I have this. So I took a short. I see the sweeps. I took the short. This is my scale. And then looking back, it's still the same thing. Reversion. Back here and out the bottom. So that's my plan. And you'll see. I mean, look at this stuff. Trying to come where? Here. Now, when I'm coming down, and this got really problematic because of the volatility. It was really nasty. I see the sweep here. I'm watching the order flow. I know my buyers were here, right? So when I come back, and I got taken out over here. So, so I looked at this because this was support, broke low, became resistance. And I'm still working, and I just want you to know my thinking. If news comes and wipes everybody out, in other words, the stops, and maybe, and I don't know at the time, it's just a hiccup, I can sell it to come back to the disruption, which is right there. Right there. And it's right there. So this is support. There's your sweep. There's your VWAP. There's your mid. So subject to, trailing there. This is where the buyers were. You see it. You could exit there or scale here. It's up to you. So I got taken out over here. So it's okay. It's like, grunt and a few other choice selective things and let it go at that. So now I'm inside of yesterday's range, and this creates a bit of a problem for me. Let me show you. And this is pretty much, some of this is based on market profile. And there's something in market profile. If you come into value area, then there's about an 80% probability, past performance not indicative of future results, to go across this value area. I also have, I don't know where it went. I think it's volume point of control. Hold on a second. Yeah, this is a target, this here. Yesterday's volume point of control, that's the retail price. So if I come across the value area, this is the outside edge of 70% of the volume from yesterday. If I get in here, then I have a pretty darn good chance of getting over there. But remember what the statistical probability was. This is where context supersedes statistics. It was about a 30% probability based on the open. So this was not high on the list for me. But who am I to argue with the participant behavior? My job is to align with it. So I'm out of alignment now. But now I'm going to give you the but. The but is in the intraday time frame, I'm out of alignment. In the higher time frame, bearish. So when I get up in here, now I'm in a squeeze and I really don't know at this point whether I'm coming or going. And I'm going, well, I have conflict. In my trade plan, when I thrash, in other words, I go, has something changed? I mean, really, is this bullish? No. Well, now what? What am I going to do now? That's what I'm asking myself. Because I have conflict in my plan. All right. In other words, I have shorts and then I got what's going on. And then it's, do I stand aside? Do I get long and get aligned? Or do I let this thing play out and then look for continuation shorts? Because for me, and it's only me, and I want to be very specific for all of you, not you, me, I'm looking for shorts because I want to align for the larger rotations. So, where? Great question. And this can be problematic, believe me. So I can get bounced around as well as everybody else. You know, it's like I have no monopoly on knowing. So I can look at this and I can look at this and I can look at this. So I start looking out here for liquidity. And I do know this is very difficult. By the way, let me see about this here. I'm trying to remember what I did over here. Oh yeah, I remember this. This was a short for me. And the stop is here. Okay. So if you take it here, your stop is there. If you get this, your stop is there. Doesn't matter. Here, stop. Here, stop. Trying to come back across the range. And now I have to be conscious of this outside edge. Let's just watch the behavior. So I took a short here. And I got this. So, and I'm kind of in my own mind, I'm going, well, this was the fair price yesterday. But I'm inside of value. So this is very tricky because I might only come down out here and then come back. If I don't fall out, then I can get squeezed out. But I'm okay with this because think how the market might work. If this is the fair price from yesterday, notice where we came. And by the way, if you were long in the TraderLab, this is a target for longs. So me, no long. So what about me? Well, if it's a target for longs, isn't it also a potential place to get short? Maybe? What do you think? So this is a short. I didn't get it here. I got it over here, but my stop is here. When I saw this, you know how it is in hindsight. You go, gee, I should have waited. And then the other part is, how are you supposed to know? You can't. So anyway, when I saw this and the teeth chattered up here, oh, you're going to get stopped out. No. Now this comes in. Let's look. Let's come back and see if we can see something of interest. Now, what I show you here is not mechanical. It is really much more, let's look. Now, what this is going on, I have no idea, But I know this is very important up here. So break high. This was where the short was for me, and this is support. That's resistance. So I just want you to see how you might use this. Now, if you're able, you have to really be anticipating this stuff. You can't just be sitting back, taking a nap or eating your sandwich. You have to anticipate to participate. When I break under here, though, let's look at behavior. See? Is this interesting to you? This is order flow. This is order flow. This is order flow. That's order flow. So break low, resistance. So when this happens, here's some choices, not a recommendation. I can sell here. I can move my stop here. Whatever it is, you know, whatever you're doing, you're doing. Anyway, that was a short. Now, let's look at where this thing went. Now, I'm inside yesterday's range. So what do I know? I know if I sell and I have a location, don't forget. So this is all auction based. I need to get outside of yesterday's range. Now, watch. So hanging out, having a wonderful time. Figure I got you now, right? Sweeps. Yesterday's low. This is trouble. Now, I don't know until hindsight.
Trend alert. Trend alert.
Anyway, so I just trail, So I look at this here, break below it, resistance. Break below, this is support, you see it? This becomes resistance. Break below, sweep. Now I come up right here. I come up and I'm going, well, I know my buyers were here and I got my stops here. I got another layer of support down here and I got to get outside yesterday's range. That's what I know. I have this and this suggests counter rotation. It's the opposite of this. You see the buy sweeps and it doesn't mean, and you notice here, see the sell sweep? Up, buy sweep, down. Break low under here, resistance. Break low. What about this? Resistance. What about this one? Resistance. So subject to, and I give things a little more room because I'm trading a higher time frame, so that's my plan. And I'm not saying it's a good one. All right. So still hanging in here. Taken out. Okay? Resistance now is up here. But what did we do? Let's look at what we did. We didn't fall out of yesterday's range. So that's a problem. At least for the short. Okay. Resistance. Look where it is. This is another short. And I'm trying to come out. So I'm just telling you is I'm using order flow and locations and I'm trading short. Now we have other traders in TraderLab who are just, shaking their heads going, oh, he's out of his mind. And they're long. Isn't that interesting? And by the way, there's not right wrong. I really want you to know. How do you know? Well, we don't know the outcome of any individual trade. But if we have a statistical edge that we vetted, then we know that when a condition shows up and our structure for what I call structured trades, and there's 60 PDFs, which you guys are, I'm sure, familiar with, that are available to you in the TraderLab that you can download and reverse engineer. But you really got to come to TraderLab if you find this methodology interesting. And there are days it's kind of like flying through turbulence and you wonder what happened, and that's with trade management. And in TraderLab, what I advocate is a minimum 2-lot configuration. The job of the first contract is to buy the stop on the second one. So what does it mean? When you take a full stop, you're stopped on 2. Or you get risk neutral with the first one and you scratch. Over time, if you have a positive expectancy on the first one, better than 50-50, then most of the time you're going to get risk neutral over a random distribution of outcomes. If I get the risk off, it gives me better control over the lunatic under the hood, fight and flight and all this thing. So anyway, this is a short. Now I know my buyers are here. So let's just see what happens. See? Where's my buyers? Here. There's the range. So I'm coming back outside again. So for me, short, this could be a short or it's nothing. Back here, another short, and there's nothing wrong with these, other than, you know, wanted to fall out. And when I say wanted, of course I wanted to, but I also know I'm kind of got the wind in my face. I'm like kind of leaning. This, in a way, in the intraday developing time frame, is counter trend, but in the higher time frame, I'm selling in alignment with the higher time frame. But it doesn't mean anything. It just means, well, okay, watch. See where my resistance is? See how it behaves? So I have a sweep here. So I can sell that. I can sell that. Same trades, same locations, and I'm just trading rotations. I guess that's what makes me a day trader. But I'm also, I want to remind you, keenly aware that this is potentially problematic. So I'm trying to get back out here. Okay, so all of these shorts from here or from there to there, there to there, this to there are the same trade. Trying to get out here. And where were we going? Down here. This is all the same trade, guys. So short, 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 right? This is all shorts. Good, bad, or indifferent. Shorts.
Is the story changing?
Now, here, so still shorts, shorts for me, shorts, and here taken out. Okay, so that was it. So now I still want to get short, but I'm now here with you guys. So let's see. I haven't seen any of this. So that was the end of it, for me. Still quite workable for me. I don't have a problem with this other than, you know, this kind of stuff is just wicked, really is. So if you got to use stops always, you have to be disciplined. And when something like this happens, you're if you FOMO into it, this is going to happen to you, right? Just wait. If I get confused, let me explain confusion. Conflicted, because everything is random, so we're kind of in a state of, I don't want to say confusion, but we're in a state of maybe. Here. So this is resistance. I have a sweep here. I haven't seen this part here. So where's my support? Let's just draw some stuff out here. This was resistance. You know the old saying, resistance becomes support. This is an important location. Remember that. Once I'm above it, now I haven't seen this, but this is like an over-under for me. And I have to be careful because I can keep coming through the range. But this is important. I'm outside of yesterday's range and the higher time frame is down. So for me, I'm just going, well, I have choices. I can get long, or since the market is already squeezing, I can then consider trading I'm just going to become a rotational trader in here. So I'm just going to trade, whatever around this thing. Support, break. Here, let's watch.
Short delta saturation.
Look at this come in here. So these guys come in, this comes in, this comes in. It's like the invisible hand. Let's watch. Let's see. Yeah, this is very messy here. Okay. I can tell you that I'm okay with selling this, but I don't think for developing traders that would be a good idea. This is really more interesting, this over here. Let me try to move this so you can see structure. So you can see this structure, break high. Now here, when you come down, if you sell this, you take a stop, all right? And you got to be up above this stuff. So you might get picked right here. If I sell something like this, just so you know, and I get taken out, when I take let's just say I took a short here, I'm already aware about this. So I have to get risk neutral at what I perceive to be an obstacle. So if it comes back, this is that 2-lot minimum configuration I talk about. I'll get taken out. And depending on the number of contracts, I can still take a loss because I may scale here and then look to stretch these scales out. There's another scale would be here, there, relative to that and that. Okay, so this is my next scale if I had taken this, and then I'd get taken out of it. So it wouldn't be a loss, it would just be disturbing. Come back up here, squeeze those guys out, and then again, nothing here, but this is where I want to be interested. Let's see what it does here. Let's see if we can move the screen. There you go. Okay, you guys have questions. I think we're kind of caught up. This is still an area of interest for me, not a recommendation. I have alignment here. I have this. I have to get outside of this to break low. In other words, I have to get outside of yesterday's range. Okay? This is a trade that I would entertain, not a recommendation. And the idea of this is to try to come back across all of this. But we are somewhat directional, so these are, I think, for me, I'm much more aggressive with trade management on these. And I may be, it may go nowhere. All right. So, because the trend is up intraday. All right. So, and I'm inside yesterday's range. So this is problematic. If I don't fall out of yesterday's range, then we're just going to overlap, So I have to get outside of this 16 area. This is called the low volume node. And what it's doing is we're doing this. Too high, too low. We have rejected what's below us. So this is suggesting higher. So if I'm doing anything over here, I have to, this is, for me now, would be counter trend. But I'm quite willing to sell it. So what I have now, we talk about trend counter trend, and that is really a time frame thing. So in the intraday time frame, right now the trend is up. In the higher time frame, the trend is down. So for me, the choices are take what I perceive to be counter trend trades in the developing daily time frame, or get long, which in the higher time frame is counter trend. Yeah. So that's about it. Hold on one second. You've heard you mention getting risk neutral. Wouldn't it be better to be risk neutral as early as possible? Marvin, it's all up to your plan. I can't tell you what's better for you but in theory, okay, you can just get, if you're using a 1-to-1 R on your first contract, so in other words, risk 3, take 3, that's fine when you're developing. As you develop further, you would need to start keeping statistics and what is the probability of getting to just ahead of the HVN, high volume node, versus just a flat fixed scale based on risk. There's not a right wrong to this. It's really metrics driven. So hope that answers your question. There's not a right. The thing about trading is there's not a right wrong. What there is probabilities. And that's different for all of us because that's all time frame based for me. So Now, remember, what's the condition of the market? We're inside yesterday's range, and this is the fair price. Now, we can, and there's about I think it's about an 80% probability that we go there, but there's only about a 13% probability we go there. What do you do about that? Well, you can wait if you want to be a seller. If you want to be a buyer, you wait for long continuation trades. You can trade either side. So what I try to do is look for the dominant side. Now in the higher time frame, the dominant side is the shorts. In today's developing time frame, in the morning, it was the shorts. Now we have the short squeeze, and then we have to really find out if we can continue higher because there's quote negotiations going on, which is a fundamental input that disrupts the auction. Ethan, you're saying how do if you say the higher time frame trend is down, but intraday is up, how do you determine trend? Um, you have to align with the time frame you trade. Uh, I'm trading a multiple time frame configuration. So the dominant side for me is the shorts, but today, and we have a fundamental disruptor in here that disrupts the auction. So I can trade either side, but if I'm going to be taking shorts here, it's different for me to take a short in this condition since we're outside of yesterday's range, or inside yesterday's range, I mean, then and there's VPOC migration, which is saying we're accepting prices up here. So now what I know is this might be too low, and I can do the following. I can push off and continue, of course, to there, and then up here. That's one possibility. Or this becomes too high, and I break below this, and I come here. I would say shorts are high risk at this point, and I'd be perfectly okay not trading right here. In other words, I don't want to get into, let's say, short-term trading. You know, just hang out. What's interesting is if you understand edge, you can determine time frames and edge. And I want to try to keep this simple. I can be trading shorts even though the market's going up. We have other traders in TraderLab who will go long when the market's going down. You know, it's a matter of perspective and rotation. It's not a right wrong. But for me, you're asking me the question, if the trend is down, how do I determine the trend? Time frame. So as a day trader, trend is up here. And then we can either get in alignment with the intraday trend or look at this as a short time frame counter trend squeeze as it relates to the higher time frame. So for me, you see, what I don't want to do is confuse you guys, which I probably am doing, is I am aligning with a higher time frame. So I know I have longs in here. And I know if I'm taking shorts, I have a problem for the shorts. So when I'm trading this way, I'm very, very aggressive to get risk neutral. So I had another question here. Do I use a 1-to-1 for the scale? Or do I come back here and down here? Well, in this configuration, this is too low, I know if I come out here, I can get continuation buyers, and I know there's stops under here. So subject to, and I have to get under this thing here too, by the way. So outside, if we only come out here and come back here, that's called mean reversion. If I can get below this, I can get the stops under here. But remember, this is my outside edge, and this is the range. So for me, if I'm taking shorts here, I'm very much all about getting risk neutral. And what I'm trying to do, and this is just an idea,
Yes, short midpoint reversal. Short midpoint
So this is a short for me, but I have to be conscious of this and this. Okay, so what this is this. Okay,
Trend
this is
alert.
all right.
Trend alert.
So this is where we're trying to go, not a recommendation. And if I can get below here, I have to watch the behavior right here. So let's see what it does. Anthony, I didn't change anything. I'm just following my plan. Notice where the support is. So now, if I'm getting short, which is this is a structured trade for me, not a recommendation. If I get short, and this is a migration trade, I made them up many years ago. This is where I'm trying to go. And if I can break here and hold it, then I just keep going down the financial food chain. This is very important. This is an outside edge. It's right there. It's called a low volume node. Think of it this way. It's on sale, retail. I'm not paying that. The language of the market. So if this is the fair price and this is too low, I'm going to come right there. So that's why if I'm taking a short here, this is where I'm working. Then what happens? If I can fall out, then I'm back on the short area. I mean, would be short, but then it's starting to fall apart. But until it gets under here, it hasn't. It can come right back here. Let's see what it does. So this is what I'm doing here is outside in to the outside here, back up here, VPOC migration. If that's still too high, I'm not paying that. I come down to where my buyers were. And here's my buyers. You see the behavior? So now, and we have our icebergs and we have liquidity. Liquidity, liquidity, liquidity. This is very important. Do these guys absorb? And I think I'm seeing a sweep. Is that a sweep? Yes. So if I'm seeing a sweep into this liquidity, this is a key event right here. Let's watch it. Let's watch what happens here. Do I rotate? So here's the possibilities. Keep going naturally. Or here. That's what I know. Let's watch. Now you're probably thinking, what the heck, right? This is really the intersection of time frame, guys. You know, if we're looking at this, and I know in TraderLab I was getting, why are you still short or what are you doing? And it's my time frame. It is not. I'm just trading different time frames. So, and remember what my objective is. I trade what I perceive to be a broad stroke, not. I'm not a scalper per se. And I don't think anybody ought to do that if they want to stay in business, but that's just a personal opinion. Let's look at this. Let's look at this thing for today. So this was the fair price from this day. This is that value area, and this is what creates the what's happening, because I can come right through this and come up through here. So that was my concern, right? Once I'm back below the fair price, now I'm back in the short area. And once I'm under, hold on, losing it again here. If I can get back on outside of this range, then I'm back in the Barca Lounger. I'm looking for 60. So all I've been doing is trading towards 60. Doesn't mean it'll ever get there. Not important. This right now is my outside edge. So I just want you to see the levels are not walls. Think real estate. That's kind of the way I think of levels. They're areas of behavior, not predictive. Where's my resistance now? Here, right? Maybe. And where's my, right here is the big kahuna, right here. If I can get under here and keep going, now I'm back in and get in here, the IB, everything now for me, and I have to stress so much. I am trading this is what I tend to trade, this kind of stuff. Because why? It pays for my stops. December is asking me, when vetting an edge, how can I improve distinguishing important behavior? You really can't if you have process and structure. We cannot distinguish. That's part of the randomness. What you need to know is when X shows up, whatever it is, that you have vetted, that it has an edge, there's no difference between sampling. If I take this trade here, which is a structured trade for me, and it just blows right through, I take a stop, and this time I take it and it does this, how can I tell the difference? The answer is I can't. So I've accepted, and here's the way to think of this. Let's come back to what the business really is. It's not being right or squeezing the risk out, you see, or having a being assured. That's our primal wiring. Who wants to take a stop? I don't. Do you? No. Let's put that aside for a moment. What we want, what we need, has nothing to do with the business. We have to change how we experience the business, and this is very hard for us as humans because we're wired for certainty, avoid risk. It's primal, and it works great for survival of the species. But in a gaming environment where it's all random, we can't get away from it because that's the environment. Notice where our outside edges. You see, this is the key area. So now I have resistance over here. So for me, I know if I'm coming down, I can, right here, this is my outside edge. This could be a scale, this can be a scale, and this is resistance. All of this is plan based. But I'm all right with this. If I get a rotation from there to there, or here to here, I'm quite okay. One trade. So if I take a trade and take a stop, which happens all the time, I just go, wow, that's nice. The reason I can, not nice, but the reason I can do it is because I've changed. For me, I want less trades, but I'm okay probing the market for location. So I changed it for myself, so I don't have to be attached to a trade. In other words, I got to get this, or I'm going to take a stop, and well, what is that? That's just overhead and cost of production. Not right, wrong. Let's see what happens here. This is important, right? There's buyers there. There's your icebergs. So this looks like this is going to get taken. So that's okay. We have a problem with that? I don't. Where is it? Yesterday's low. What do you notice? Resting liquidity. Would you cover here? Outside edge. Remember, this was what? The outside edge. Is it on sale? Well, if it's too low, what does the market tend to do? Come back there.
Yes. Long midpoint reversal. Long midpoint reversal.
Does that make sense?
Yes. VPOC shifted. Yes. VPOC shifted.
Okay, VPOC shift. Now let's watch what happened here. VPOC shift, too high, we're out of here. VPOC shift. So this is a variable high volume node, potential target. And if this now, we have to watch, it's very important what's going to happen here. It's either going to go bango or bingo. Watch. Now, if you're going to ask me what do I think, I'm going to guess, because my thinking doesn't pay me. My doing pays me. Doing, not thinking. Because I'm guessing. I'm going, is it going to go here or here? Well, here's the thing. What do I know? This is too low. This is my outside edge. Remember, this was the outside edge. If I can't get under here and fall out, then what? Then possibility to come back here. And this is TraderLab. Can you guys see how this might work? So let's do a couple other little pieces here so we don't fall asleep in the Barca Lounger. And then this. Okay? So can you see how this might work? So if I'm only going to take, let's just say I'm going to take a short. I'm only going down here. Now, or, let me give you the or. If I know this is an outside edge, I can buy this to go there. Both are correct if it's vetted, you see. This is day trading. So you can, right now we're still outside of, I should say we're inside, I keep thinking outside. We're inside yesterday's range, so the longs are supported here. The shorts are counter trend. But for me, counter trend in a developing daily time frame, but aligned with the higher time frame. Other traders are going to take longs and not take the shorts. Compounding and confounding. You guys with me? Does this make sense? As a day trader, you can work either side. You just have to know how to trade either side. As long as we're in yesterday's range, the longs make sense, right? And we're trying to go there. Not a recommendation. So let's see what it does. So can you see how you might trade either side? And I'm not suggesting anybody trade two sides. I'm suggesting you identify in your time frame the dominant side and you align with it until it changes. I gotta switch something on over here for us. One moment. So this is too high. This is fair. This is too low. That's what I know. Now, what do I do about that? I can trade either side. And down here, it's probably around here, is a low volume node somewhere. It should show up in here. And this, so what is a low volume node? It's where is an extreme or an outside edge where volume dries up. So when the market comes outside, if it's too low, the market then does something called mean reversion. And this is the mean, or this is the mean, this is the previous mean. And I call this a variable high volume node. One moment. So the nature of this is, if this is too high, is to potentially return to it and check it. Doesn't have to. This now is the retail price. So the nature of the market is to go, is that really too high? It might be, and it's not my job. I don't know. So let's watch and see what it does. Remember, if I get under here, so we just have to see. Nothing is predictive. Remember, guys, I can't say it will do something. I can tell you it might do something. That's as deep as it is. It's very interesting. 1475. It's right there. It is. This is the outside edge. You see, so it's a low volume node and it's right there. So the nature of the market is it does this. And that's mean reversion. So the idea is the mean is there. So what the market will do, unless it falls out of here, is rotate here or here, come up, or if it can't get over here, then back to here. If I get below here, then I'm going to get my helmet back on. Not recommendations. Do you guys have questions? Is this making some sense? Ragnar, you're asking me, do I put limit orders out and just put it there ahead of time? No, I never do that. I never put an order out. These are levels of potential behavior. They're not walls. There's no such thing as drawing a line on a chart and somehow thinking that a line on a piece of paper is somehow going to mean anything. It means nothing. This variable high volume node doesn't mean anything. It's an area. It could pop here and do the same thing and test it. You see what I mean? There's nothing. I put a limit order out to exit. I use limits for exit at targets like this. If I was long, you know, my order would be like, right ahead of this, because this is like a volume point of control. This is the highest volume so far for the day, so far. So it's fair. We don't want to trade at a fair price. But why would I trade here if it's fair? Because it was too high and I rejected it, you see. So when this thing shifts, if I get the break low and it's too high, I can sell it. Now here, that was too high. Well, if this becomes too low and the outside edge is too low, then I can come back here. Let's see if it actually does it. Now, will it do it? Part of the thrill. Nobody knows. I don't. But what I know is how the market works. And if I understand market mechanics, then I know that, think of support and resistance. This acts very similar in the sense of, but what's driving this is what it means. What it means is this was the retail price. Think of shopping. And if the price becomes too high, and because the buyers are not willing to pay for this, then we have a new retail price, high volume. But the nature of the market in all time frames is to come back, if we can clear this, to go there. That's the nature. So the question of putting an order out, no. Burgerish, I use limit orders when I enter. I don't use market orders. I use bracket orders because I want my stops and my scale placed at the same time. So I just use brackets, and then I move things around. So for example, if I was, so I'd have a bracket order and they're far, everything's kind of out. So then I grab my stops, pull them, and move my limit orders out, for targeting. Remember and this is not a recommendation. If I can get above here, I got this. If I can't get above this, maybe I got that and out the bottom. That's what I got. That's all I got. I don't need to know anything more than that because I can't know it until hindsight. So that's it. Potential target is here. And this is not a long, by the way. Me, I would sit in my Barca lounger with this thing. But I'm trading a different time frame. Remember that. Let's see what it does. Do you guys have questions while we're waiting on this thing to ferment? So I don't put orders out. The only time I'll put an order out is I trade probabilities or statistics. So, and I trade behavior, just me. So I know this might be too high. I also know the market tends to come back and check prices. Now, suppose it's not too high. Well, then I can break above it, check it, and if it's now too low, I can continue on to another target, which might be, I don't know, but it's not for me to know, out here, which we could. So I know I might get there if I get through this stuff. And there's, there's some liquidity. It doesn't have to stay in the book, remember. So that's what I know. So if I'm short from wherever, this is my problem, okay? So if I can get under here, then I'm inclined, shall we say, to be, my perception would be that I'm now really in a mutual alignment. In other words, higher time frame, and this would change. But at the moment, any shorts I take here are counter trend. For me, in the developing time frame, but aligned in the higher time frame. So let's see what it does here.
Short no saturation.
It's always interesting, isn't it, about this stuff?
Yes. Midpoint reversal. Short midpoint reversal.
Let's remember where we're trying to clear this. If we get under here, then things get interesting, right? I hope this makes some sense and you're not finding it too conflicted. I think there is conflict here because I'm really talking about multiple time frames, and I'm viewing this differently because of my time frame. If I was just operating in this, then I'd still be doing the same thing. I'd just be taking chunks, trading chunks. So, but I'm in a little bit of a different scenario. Remember where my outside edge is. It's this and this. So to go anywhere to the downside, I got to get under here. So until that happens, it's just rotational trading. It's just, I kind of think of this more like subway purse snatching,
Yes. Long midpoint reversal. Long midpoint reversal.
Remember, this is a potential target up here, not a recommendation. You also notice what this is aligned with. This was the fair price from yesterday. It's now suggesting it might be too high. So we have to see now if we come back here or not. So until I get under here, it's basically rotational here, okay? And in the intraday time frame, it's up. It's two-sided. So I'm just going to say to you, I'm all right trading these rotations and I can trade them from either side. I am trying to get under here because of the higher time frame downtrend. So I hope that's making some sense. How we doing in YouTube? Everybody conscious? Hey Van, how are you? Please give a like if you're visiting in YouTube. Appreciate that. Support the stream. There's no cost for TraderLab. So if you find this useful and if it's helping you get a better understanding of this business and what you can do, the thing that is so terrific about trading, it doesn't matter what you do. What matters is that you only engage when you have an edge that favors you. And the thing about edge is it's random, not the edge, but the distribution of outcomes. That's what'll get you. So when you use a process that has edge, you're going to have losing days. You're going to take stops. You're going to go, what the heck? And then, you take 3-4 stops in a row. You're going to take what might be a great plan and throw it out the window because of your emotions, not because it's defective. You might want to come to TraderLab if you haven't done it yet. There's a document section there. There's a library of webinars, and then there's the TraderLab community. In fact, there's 60 PDFs of some of these trades that I've been talking about, maybe, that you can download and reverse engineer. Some of these are actual live trades. Some are just screenshots. These are not plug and play. You might have figured out by now, if you've been trying to become a sustainable, create a career path for yourself, that you can't imitate what other traders do. You certainly can't do what I do, but you can learn from what I do and what the other traders in TraderLab do, because everybody does their own thing. But we use some basic processes and methodology to understand market mechanics. How does it work? Why does it do what it does? How can you get in alignment with it? This is the process. You can learn this in TraderLab. So how does the market work? What tools? It's all based on time frame. What is the condition in your time frame? So trend up in a developing daily time frame, higher time frame down. Multiple time frames. Think Matryoshka dolls, a vertical integration of time frame. So you're trading inside rotations, and you can go down to any rotation where you have an edge. And then the order flow tool, of course, is Bookmap, as I like to say, the tip of the spear, or where the financial rubber meets the road. Thanks so much for visiting TraderLab today, guys. Appreciate your time, your interest. Please give a like if you're visiting in YouTube. Be sure to come to TraderLab. Use the link in the bottom of YouTube if you want to come to the TraderLab community. All you have to do is confirm your Discord username, and then all the resources and the no-cost education is available to you in the Bookmap server. Other streamers, specialty education on stocks, options, crypto, and of course, OrderFlow, the business of trading, building trade plans, and so much more. Don't forget to give the like. Look forward to seeing all of you guys back in the TraderLab real soon. Take care, trade safe, and if you're gambling, go to casinos. It's more fun. But if you want to build a sustainable business, maybe you might want to stop by the TraderLab. Thanks again, guys. See you tomorrow.